Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 21st through April 25th. We're in part one of our weekly trading game plan. We'll strive to help you make money trading amidst more Trump tariff turmoil. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for April 21st through April 25th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week, and you can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes documents for this week, as well as previous weekly trading game plan notes documents. And you can also find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome, John. Thank you for joining us. Hope you had a great trading week and are doing well. So firstly, we'll look at how the markets ended up on Thursday, as the markets were closed on Friday for Good Friday. So we hope that you all enjoyed your day off for Good Friday. So again, here's how the markets ended up on Thursday. So the Dow down about 1.3%, NASDAQ down just slightly, 0.13%, S&P up just slightly, 0.13%. So negative on the Dow, pretty much flat on the NASDAQ. We just see some kind of oscillations. We had 69% advancing, 27% declining, only 28% new highs, 72% new lows. We still only got about 18% above their 50-day moving average, 82% below, and only 20% above their 200-day, 79% below. So although pretty flat markets with the exception of the Dow, a lot of bearishness, a lot of weakness under the covers. Welcome, RT. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at the heat map from Thursday, we see most of the Mag 7s were down with the exception of Apple. Big hit again on NVIDIA. We'll talk about the Trump tariff turmoil with semiconductors, restrictions on some of the GPUs, semiconductors hitting the NVIDIA, AMD, etc. UNH had poor guidance, poor results, so that dragged the Dow down significantly. Healthcare down a little bit. Most of the other sectors mixed. Look at some of the news. Disputes between Powell and Trump. Smart money index doing something unusual. Why it could be a buying opportunity. Wall Street week ahead, busy U.S. earnings. We'll look at earnings coming up, grappling with tariff fallout. Rates on hold, but cuts still possible this year. Dow Industrial slip. Trump renews attack on Powell. S&P ekes out a gain. Dow tumbles 500 points to 3-day losing run. Also saw oil rebound back off of 60, now headed back up to about 65. We'll see if it is able to break that resistance at 65. If so, head possibly up to 70. Otherwise, rebound off that resistance on 65. Natural gas been breaking down near 3, low 320s. Gold continues to be a beast and make new all-time highs. I think it tested the 3350 level. And so range between 3,300, 3,350, but strong, almost parabolic upward trend continues in gold. See the futures, Dow negative, S&P and NASDAQ and Russell all up. So bond yields rebound back up. So we've got the 30-year back up to 4.8. 10-year at 4.33, 5-year just a little below 4% at 3.9. So bond yields back up, bond prices back down, and got Bitcoin's oscillating right around 85 right now. Welcome, MD. Thank you for joining us. Hope you had a great trading week and are doing well. So we'll look at a breakdown of the major indices and the technology components. Just a reminder, you can access these screeners in our notes documents as well as in the screener sheets of our ETFs and watchlist Google Sheets at any time. So if we look at the major indices, see Dow went up to that pivot point, got rejected. This is pretty much where it went up to after the tariff pause. We'll see that on all the major indices. They went up to their tariff pause and now they're retracing. Got a significant downslope in all the major indices. IWM much weaker, so it didn't quite even make it up to that tariff pause rebound. It's rolling over. Again, a lot of weakness. Death cross on the IWM. Looks like we're approaching a death cross on the Dow. Again, very bearish signals. Did make a death cross on the Qs, the NASDAQ. Again, we see it didn't even make it quite back up to that tariff pause and is now headed back down. We'll see if we retest that low when the tariffs were put on in quote Liberation Day. Can we see these strong downtrends in all the major indices? S&P, again, strong downtrend. It also made a death cross. So again, all very bearish signals on all the major indices. So again, strong downtrends after that tariff pause. So again, the Trump tariff turmoil kind of stagnated any possible rally that we might have had from that pause on tariffs. And we'll talk about those factors. We look at the technology components, and we saw negative downtrend in the NASDAQ, so all the components, we'll just see which ones are the weakest. Again, see strong downtrend in ARC. Technology innovation, it looks like it's approaching a death cross in the near future. Biotech, again, generally weak, just not going anywhere. We'll talk about potential additional tariffs on pharmaceuticals and negative for biotechs. Again, we'll talk about the restrictions on GPUs and from NVIDIA, AMD, again, keeping suppressed on the SOXL, the semiconductors, again, very low, very cheap. But again, a lot of tail or headwinds on semiconductors due to restrictions. QQQU, the MAG 7s. So again, strong downtrend, made a death cross. Looks like it's going to retest that previous low, that double bottom there. TQQQ leveraged on the Qs, again a death cross, very strong downtrend, probably going to go back and retest that bottom on from Liberation Day. And broad technology, very similar, strong downtrend, had a death cross for quite some time. And again, more downside back to that Liberation Day low. So again, all very bearish, downtrending on technology. Welcome to Ricky Khan, Douglas PC. Thank you for joining us. Hope you all are doing well and had a great trading week. Okay, let me grab a drink. We'll look at the groups, sectors, industries, and countries. So if we look at a breakdown of the groups, the sectors from Thursday, we're going to see energy is making a resurgence, so rotation back into energy. Real estate made a little bit of a rebound, very defensive. So even though most of the indices were up, very defensive bent on Thursday. Utilities, The weakest, again, healthcare and technology. For the week, again, we see energy leading, real estate, basic materials, utilities. So again, sector rotation back into energy. We saw that rebound in oil, see a rebound in uranium, coal as well. Again, real estate had benefited from a decrease in yields, but we saw yields bounce back up on Thursday. Weakest, again, technology, communication, consumer cyclical, again, Mag 7 driven. For the month, very defensive bent, so consumer defensives, utilities, real estate, but most of the sectors negative. So again, we're seeing that rotation back into energy now. So possibly that there's an opportunity there amidst all the Trump tariff turmoil to play the rotation back into energy. Look at the industries, and we see oil, coal, so energy, see some grocery, so defensive. REITs, again, got a little bit of a reprieve. Uranium, steel, so basic materials, energy. Copper just slightly negative. Gold retraced slightly on Thursday, but again, been very strong. Again, silver, been volatile. Aluminum, again, UNH. So for the week, again, oil, coal, you see coking coal leading, thermal coal, uranium, gold and silver very strong for the week. REITs, some REITs positive, but the REITs looks like they did pretty well for the week. And we did see the yields come down a little bit. Steel, negative for the week. Transports, and semiconductors, restrictions on semiconductors, internet, and again, UNH. So for the month, again, gold very strong. Low end discount stores, grocery stores, again, very defensive. Tobacco, REITs generally slightly negative. Oil, uranium, energy was negative. So again, we're seeing sector rotation back into energy. So again, possible opportunity there to play that sector rotation back into energy. Look at the international markets. Again, as we've been talking for several weeks among all this Trump tariff turmoil, that we think international markets are maybe some good opportunities, but a lot of volatility among the tariffs on, tariffs off, the negotiations, when we're going to get a deal, who are they talking to, etc. So we see some of the countries performed well on Thursday. Mexico has been performing pretty well. Malaysia been pretty volatile. Brazil's been performing pretty well. Again, they had negotiations with Japan. Argentina been kind of volatile. Italy also had some negotiations with Italy. Most negative, Denmark. South Africa's been very volatile up and down. Germany slightly negative. For the week, again, Argentina plus 21%, very strong. Malaysia, good rebound in Malaysia. Mexico, again. Spain, we'll talk about Spain. So we're adding the ETF for long Spain, and we'll take a look at that one. You see it outperformed for the week by 8%. South Africa positive, again, Japan positive. India, Brazil, China positive for the week, and Denmark really the only negative for the week. You see the USA underperforming. So again, we think international markets are where the near-term opportunity are amidst all this Trump tariff turmoil. For the month, see South Africa, Mexico, India, Indonesia. We have an ETF for Indonesia as well. Most of the markets negative for the month. China, significant retracement. Now we're seeing a rebound in China, so possibly an opportunity if you think we've maxed out the trade war with China. Welcome, Kayton. Thank you for joining us. Yeah, we'll look at the DAX, we'll look at Germany, get to futures, and also with the ETFs. So let's look at the economic data from last week, upcoming economic data for next week. Just a quick reminder, as soon as the important economic data comes out, important economic news, I try to capture that as quickly as possible and post that in the Surf the Markets channel of our free Discord. And our Discord's free to join. You can find an invite in our notes documents as well as in the description to our videos. So again, as the important economic data comes out, try to capture a screenshot from investing.com, the raw data, also post real-time important economic news. So Discord's a great source of real-time economic data, real-time economic news. We also have a bunch of channels where you can discuss all things trading, different asset classes, using different platforms, different trading styles, 24/7. So again, we'd love to have you join and actively participate in our Discord. Again, another great source for real-time economic data and real-time economic news. So again, not much Monday, Tuesday. Tuesday was tax day. Hopefully everyone remembered to either file your taxes or file for an extension. Wednesday, we got mortgage data. See, mortgage rates are up a little bit. Mortgage applications are down. So we're going to see negative impact on the housing sector as mortgage rates continue to go back up. Thought this was interesting as well, as the March retail sales data essentially beat. So month on month, up 0.5 versus 0.4. Year on year, up 4.6. Sales month on month, up 1.4, expected up 1.3. And in my humble opinion, I think this is a pull forward of demand, trying to front run the tariffs. I think, again, we'll continue to get some of that stronger retail sales front running the tariffs. And we'll talk about, in my humble opinion, I think some of this economic data is going to be slightly distorted due to that pull forward front running tariffs. So because of the Friday holiday for Good Friday, Thursday was the April OPEX day. So we had additional volatility on Thursday, in addition to the long holiday weekend. We also had OPEX on Thursday. It's interesting, we got building permits were actually slightly better than expected. But again, that's just permits. They don't necessarily have to start building, or they can wait and try to front run the tariffs. Also got housing starts a little weaker, so they're permitting a little more, starting a little less. Also got jobless claims data, initial claims weaker than expected. So that's positive, fewer people filing than expected, and also down from previous. Continuing claims also a little higher than expected, so people having a little bit harder time finding jobs. But the 4-week average down from previous, so the job market continues to be resilient. So again, no reason for the Fed to cut anytime soon. We still got a strong consumer currently in the data, still got a strong job market as the data shows. But again, all of this may be slightly distorted by the tariffs, which on and off. Now we got to pause. We don't really know what's going to happen. So again, some front running in my humble opinion. And then again, markets were closed on Friday for Good Friday. So again, I hope you all enjoyed your day off. Welcome, Sydney Osborne. Thank you for joining us. Hope you had a great trading week and are doing well. Okay, let me grab a drink. We'll look at the rest of the economic data from last week and the upcoming economic data for next week. Okay, let's look at some of the other economic data from last week. We got a consumer inflation number, high, still high. Again, consumer expecting higher inflation. Some bond auctions a little bit weak. We've got Fed officials talking, hearing their opinion on the impact of tariffs. Again, a lot of uncertainty. You'll keep hearing, and we heard Powell as well, is with all the uncertain impact of tariffs. They're not in any rush to cut anytime soon, even though it sounds like, a number of them would like to. The data just doesn't support a cut until they see the impact of this Trump tariff turmoil. Manufacturing down, but not down as much as expected. Import prices pretty stable. Crude oil stocks up, although again we saw oil prices go up. Again, we talked about mortgage rates up again, retail sales, industrial production down, utilization down a little bit, probably impacts of tariffs as well. Business inventories up, so probably again front running tariffs a bit. Retail inventories pretty flat. Crude oil inventories up a little more than expected, but again, oil prices up, rebounding. Bond auction again a little weak. The Atlanta Fed now, inflation's still above 2%, but dropped from 2.8 to 2.2. Negative, so that's GDP. So still predicting a future recession. Talked about building permits and housing starts and jobless claims. And manufacturing negative. Philadelphia. Natural gas storage up, but less than expected. But again, we saw natural gas prices down. It's interesting. Oil rig count bounced up 1. So we had seen it decline last week. Total rig count up a little bit. So again, possibly stabilizing the price of oil. Looks like they think it was near a bottom. And then we had Good Friday, just some commodity reporting. Let's look at the economic data for next week. Okay, so we've got Fed officials talking, IMF meeting, might be some input as to, potential for global recession, increased inflation, etc. And Fed officials, more IMF meetings, mortgage rates, building permits. Weekly jobless claims, durable good orders. This might be a little bit interesting. See if there's a pull forward, again, trying to front run tariffs, or if it's expected to decline. Again, we'll see again if people are trying to front run the tariffs. Initial weekly jobless claims, home sales. This will be kind of interesting. See if existing home sales improve. We saw building permits up a little bit. Get Michigan sentiment, consumer sentiment data. This was very negative last time. It's expected to be the same pretty much this time. So we'll see if consumer expectation for inflation continues to be very high. Consumer sentiment continues to deteriorate. So again, that might cause some volatility, but we don't have a whole lot of major economic data other than that next week. We're just getting into the heart of earnings season. We had Netflix, a couple other, UNH, UAL, etc. You can see the whole earnings calendar for next week. Highly recommend you go through that. We'll talk about how I think, in my humble opinion, I think generally earnings from last quarter probably be pretty good. well, in general, but what's important is their guidance, the potential impact of tariffs on particular companies. So it'd be important to listen to what they have to say, the impact of the tariff turmoil, as well as their guidance. We'll talk about how companies, probably will drop their guidance, or we even have UAL, United Airlines. They gave two different guidances based on the impact of tariffs. So a lot of uncertainty. Again, my humble opinion, I think we'll get a lot of companies pulling guidance or having to give kind of best case, worst case guidance numbers. So again, be very important to see. There's Tesla on Tuesday, so that'll probably be quite interesting. GE, Verizon. So highly recommend you look through the calendar, see which sectors are going to be impacted, companies that might impact your trading, or again, sympathy in the same sector, as the impact of tariffs on one company in a sector probably applies to many of the other companies in that same sector. So um, very important to listen to their guidance going forward. Although, again, my humble opinion, I think most companies will probably beat on earnings from last quarter because we didn't have the impact of tariffs yet. So, okay. Again, we don't get the next FOMC meeting until the 6th and 7th of May. We do not get a dot plot, so we won't get a change in their trajectory, just get a decision. Again, in my humble opinion, I don't think they're going to do anything. I don't think they're going to cut in May. I don't think they're going to hike in May. I think they're going to talk about all the uncertainty due to the Trump tariff turmoil, and that they're better off just waiting and seeing what the ultimate impact of those tariffs is going to be before they take any action. And again, we heard Trump or Powell talk about that in his presentation this past week. So, and we'll hear that reiterated by the Fed officials. So again, I don't expect anything to happen anytime soon. Okay, let me grab a drink. We'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 20 free fractional shares of stock when you open and fund your account with as little as $500. Each fractional share worth $3,000 to $3,000. You'd use our affiliate link in the description box below. You can get all your free fractional shares of stock, take advantage of any other promotions they have at the time, and also help support our BeachBum trading community, all of which we greatly appreciate. Welcome, Paul. Thank you for joining us. Hope you had a great trading week and are doing well. I'm using the online version of the market screen in Webull. So we can see the histogram, the distribution from Thursday. So we see more advancers and decliners, better than 2-to-1 ratio, but the percent of advance very small. So not a real significant advancement. Net inflow was interesting. So strong inflow into the NASDAQ, even though we saw it really didn't, the index itself didn't make a significant gain. So possibly some buy the dippers in the Mag 7s, steady inflow, positive, unusual for the last day of a week in the NASDAQ. NYSE actually positive as well, even though we saw the Dow down. So again, looks like we've got some buy the dippers coming back into the market even ahead of the long holiday weekend. So that's kind of interesting. Fear gauge, we're still in extreme fear. Did decline from last week. So previously, although it bounced up a little bit from Wednesday, Thursday, we're still in extreme fear. Looks like Webull fixed their short-term graph on the fear gauge, so we can see it's not as low as it was in Liberation Day, where it hit a bottom of about 9. So it's not quite that low, but again, when we got those further restrictions on GPUs, the hit on NVIDIA, AMD, etc., caused an increase in the fear. So again, we're still kind of in extreme fear. Again, you can see the near-term earnings calendar day by day, and here in the calendar widget, Webull. So you can go again day by day, see who's reporting, what time, the expectations, etc. So great source for keeping up with near-term earnings here in the calendar widget in Webull. Let's look at the best performing industries for the week. So uranium, again, energy very positive. We can see UUU, UROI, UEC, some of the individual uranium companies we like. Oil and gas, biotech actually positive. Oil, REITs, pretty positive. Metals and mining. Coal, again, energy, actually pharmaceuticals positive. Natural gas, utilities, defensives, transports, again, utilities. Look at the ETFs. So retail rebounding, pharmaceuticals, India, biotech. So it looks like people are thinking we hit a bottom with biotechs, pharmaceuticals, even though we've got the potential of pharmaceutical tariffs coming on. So careful with that one. Looks like a short on the Dow. Okay, retail positive, biotechs, utilities. Short on the Q, short on NASDAQ. So we've got a VIX, short on the VIX. So we'll see the VIX drop down below 30. So possible retracement down to 25 or so. We'll see that in the futures. So up on the Russell, up on small caps. Industrial strong. Healthcare, interesting, positive. Financials positive. Utilities, energy, real estate. The only negatives were technology. So even though we saw the inflow into the NASDAQ, looks like the sentiment was negative. Materials mostly green, defensives from Thursday. Oil up. Looks like high yield bonds, private equity. Okay, let's look at the futures. Also, just a quick reminder, you can also trade futures in Webull as well. I think I also saw there, I have some more micro contracts. You can trade futures in Webull. You can get more information about futures trading in Webull. We have a link to the posting in our Discord. Okay, if we look at the futures as well, again, we see those, strong downtrends in all the major indices. Got that rebound when the tariffs went on pause, then rolled over when had more restrictions, more uncertainty in the Trump tariff turmoil. So, rolled over from there. Looks like we're, headed back down. A lot of people are predicting we're going to be stuck in this range from the negative of Liberation Day to when the tariffs were put on pause for, unforeseen future. And again, we see just a strong downtrend in general with a lot of volatility. So you can expect, more of the same for quite some period of time. Russell pretty much flat right now. International markets, the Nikkei, again, initial downtrend. It's like it's stabilizing. Same thing with Euro stocks. Although again, pretty strong downtrend. It's like it's stabilizing. Easy Mike Caton asked about the DAX. So see the DAX actually made a little bit better rebound. It's not quite up to that tariff pause high. So we'll see. It looks like it's attempting to break out. So DAX might break out an uptrend. Have to listen to some news, what's going on with Germany. See if we get a swing back up in the DAX. So it looks probably stronger than most of the other major foreign market indices right now. Let me know what you think. Look at the VIX. Again, we see the VIX broke back down below 30. Futures now sitting at about 26.55. My humble opinion, I think we'll get a test of about 25, which was the previous spike back in March. So again, probably some further downside on the VIX, and then based on the news, what goes on with the tariff turmoil, see if we get a spike back up or if it continues to retrace down towards the 20s. You can look at the VIX term structure. A reminder, you can get access, find the VIX term structure tool on our homepage, beachbumtrading.com, bum without the U. We'll quickly look at the VIX term structure. Go to the links section under reference links. See the VIX futures term structure. So we can see it's still, the current VIX is still significantly higher than the front months, which is sitting at 26.50. Current VIX at 29.65. Still see we've got a backwardation in the VIX term structure, so it's still sloping down, is flattening up a little bit. But again, we probably see an eventual rotation where that goes back into contango. So again, I expect further flattening in the VIX term structure. Current VIX will probably come down. But again, we're seeing the front month is currently still above 25. It's at 26. So we're not going to get a lot from historical since it's Thursday and not a lot of change, but we do see a slight drop between the 18th. And again, it's still significantly got a little bit of a bump up and then pretty flat. I hope that all helps. So again, we saw oil rebound off of 60. It's going up to test 65. We'll see if it gets rejected at that 65. If it does happen to break 65, my humble opinion, I think it'll head up to test 70. If it rejects off of 60, we'll probably find another retest down to, or if it gets rejected off 65, I think we'll get a retest of 60. So we've got a position in the monthly dividend payer USOY, so I might scalp that off if it gets up to about 65 and gets rejected. Natural gas breaking down in the low 320s. We'll see if that breaks down further. Could try a gap fill down to 3, and then we'll see if we get a rebound going forward. Get a lot of volatility. And we see, gold's just been a beast, very strong uptrends. Again, it's almost looking parabolic now. A lot of volatility, went up to probably 33.50. These 50 marks tend to be support and resistance levels. So looks like it rejected off that, might bounce off 3,300, but again, strong uptrend. I hear the central banks, particularly China, have resumed buying gold, so a lot of tailwinds in gold. Silver had broken down, rebounded very strongly. So again, we've got these leveraged ETFs. You can also trade silver, AGQ, long, ZSL short. Again, looks like it topped out probably about 33, rejected, headed back, tested 32 again. So we'll see if that rebounds. 32 looks like a pretty good support level. See if it rebounds and heads back up to 34. Copper, again, strong bounce. Looks like it's peaking out. Other metals rebounded, rolled over. Agriculture, pretty volatile. So corn had strong rebound. Looks like it peaked out, rolling over. Same way with wheat. We were long WAT. We got stopped out of that. You can see it kind of peaked out just below 560, trail back down. We'll see if that continues to head back down to the previous low. If so, again, we'll swing wheat again with WAT. Cocoa prices low. It's good, I guess, for Easter egg buyers, to Easter chocolate buyers. Prices had been very high. I did hear that they're talking about record Easter retail sales. So again, the consumer's still spending right now. So the earnings for retailers should be okay right now, but in the future, I think we'll see a pullback from the consumer. And all the bonds, yields spiked up, bond prices spiked down, got a slight rebound this week. Looks like they peaked out. And again, we saw a little bit of a rebound in bond yields, drop in bond prices on Thursday. Dollar's still below 100, USD below 100. Looks like the euro's topping out around 115. Yen's strong uptrend in the yen, the pound, CAD, Aussie, and New Zealand dollars getting very strong rebound on those tariff pauses. So again, congratulations to any of our Forex BeachBum traders who caught that rebound. Again, we also have ETFs in our ETF Google sheet. You can trade along these foreign currencies, and you can again find those in our ETFs Google sheet. Okay, we'll come back to our ETFs in a minute. Grab a drink. We'll talk about our theme, our topic for this week, how to make money trading amidst the more Trump tariff turmoil. Okay, again, our theme for this week is how to make money trading amidst more Trump tariff turmoil. So some of the future turmoil we've still got coming is he's talking about further tariffs on semiconductors, pharmaceuticals, don't really know what else. So we've had additional turmoil, and we don't really know what all and when all these additional tariffs are going to hit. But again, we're expecting more tariffs on pharmaceuticals, semiconductors. So again, possibly additional risks in those areas. Again, we've had continuing trade war escalation with China. So Trump administration put more restrictions on semiconductors, the second tier GPUs from NVIDIA that they were selling to China. Those are now restricted. They have to be licensed. They have to get permission to sell those to China. Big hit. NVIDIA said I think they're going to take a $6.6 billion hit. AMD, I think 500 to 600 million on their GPUs they were selling to China. And it pretty much stifled any potential rally that we got after the pause on tariffs. And again, we don't know what other restrictions they might put on other products, etc. So again, the trade war continues with China, even though China's pretty much maxed out their tariffs. They said they are, using other techniques. So they put restrictions on rare earth elements, so used in smartphones, etc. So we saw some of the rare earth element stocks pop up. Also, Easy Mike had been mentioning antimony and company, I think it was UAMY. So they had a big pop again on this restriction on rare earth elements. We've talked about MET-C, and we're still long MET-C. They're coal and a mixture of coal and rare earth elements. So again, pop in some of those companies. Also, China halted taking deliveries from Boeing for their aircrafts. So although, again, Boeing has had trouble supplying all of their orders. Again, just an example of how China can retaliate on U.S. companies, impacting their sales going forward. So watch out for other companies that do a lot of sales in China. And we think of like Nike, Apple. Again, Apple impacted by the U.S. tariffs as well. So they could retaliate against other U.S. companies that do significant sales in China. Again, we've talked about this, warned about this, but even pre-election. So again, negatively impacting Boeing. They again might lose orders to Airbus if China starts buying from Airbus. And we've got all these negotiations ongoing, but no deals yet. So I put a link to an article on the status of some of these trade deals with China, Europe, Japan, Italy, etc. So you can access that article, read more about the current state of these trade deals. But again, we keep getting news that they're negotiating with this country, that country. We saw Korea, Vietnam, they're talking to. So they're talking to a lot of countries. But again, no deals yet. And you can see the prospects for deals with these countries via that article. So all this just creates, continued ongoing uncertainty. Companies none of us know what all the tariffs are going to be, what kind of deals are going to be made. So again, all this just creates uncertainty. And as we talked about relative to earnings, I expect more companies will just pull their guidance. They can't predict the impact of these tariffs on their future sales for this year. So that they could just pull their guidance, or like United Airlines did. They gave kind of a best case, worst case guidance, and that wasn't received very well either. So companies that pull their guidance, or again give these kind of best case, worst case guidance, might get negatively impacted. So again, from earnings, I think earnings will probably be okay. The headline earnings will be okay, but listen for their guidance and the impact of this Trump tariff turmoil on their future business, also risk of retaliation from China or other countries. Also, again, in my humble opinion, I think some of this front running the tariffs is going to cause distortions in the economic data. Again, we saw retail sales was actually pretty good. I think people are buying ahead of the tariffs. Again, I hear ads, buy ahead of the tariffs from like auto dealers. I see small businesses advertising that they have tariff-free products. So again, I think a lot of also with the pause on tariffs, I think companies will probably try to buy ahead of the tariffs, load up. So some of the warehousing I heard was getting full. So I think it was Prologix on Kramer, Stag's another one. So these industrial warehousing, also transports probably get a little bit of a short-term boost. But then I think once they load up and the tariffs hit, I think we may see a fall off in demand going forward. So again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But again, these are my opinions, and I hope it all helps. Welcome, Fairchild and Rick Wamps. Thank you for joining us. Hope you're all doing well and had a great trading week. Again, we've been talking about the tariffs, the Trump trade war for a long time, even pre-election. So you can hear all of our previous discussions on strategies for trading Trump's trade war, for trading when tariffs are on, tariffs are off. Now what? We don't know. So again, additional uncertainty. So again, in my humble opinion, it's going to continue to be a news-driven market as we get, announcements. These talks are going well from the administration, but we still don't see any deal. So if they do get a deal that's formalized, then I think the market will probably pop on those deals. We get pauses on some of the tariffs. Again, we saw that record-breaking bounce in the markets on the pause on the Liberation Day tariffs. So again, the market very positively react to any deal, any pauses, but if they put further tariffs on, further restrictions, again, very negative, so that will stifle the market. So again, just a lot of uncertainty, a lot of volatility, and based on news. So if you're nimble and you can trade this news-driven market, great. Take advantage of those opportunities as you can. Again, we've been talking about historical trends, the seasonality for April, for the spring. But again, in my humble opinion, I think all this Trump tariff turmoil is going to trump the seasonal trends. And as we saw, all the indices have a strong downtrend in all the markets. So even though April tends to be generally a pretty good historical month, I think we're headed for a very negative April and probably a pretty negative spring. Again, contrary to the historical trends. So again, my opinions. Okay, well, we've got a few minutes. Let's go back to our ETFs Google Sheet, go over some updates to that. If there's anyone in the chat has a particular ETF or category, topic, commodity, etc., for which you'd like to look at ETFs in our ETFs Google Sheet, please throw those up in the chat. Take a look at those quickly. Okay, once we identify our trade ideas, trade strategies for the week, and we jump over to our ETFs Google Sheet, and we can identify ETFs, or we can trade that trade idea, either long or short. You can do likewise, get 24/7 access to our ETFs Google Sheet by joining our Patreon. couple additions to our ETFs Google Sheet. Firstly, just very quickly, I added the software sector ETF to our sector sheet for both our ETF and our Watchlist Google Sheet. So another great way to see sector rotations during the trading day. So you can go to the sectors sheet of either our ETFs or our Watchlist Google Sheet and see rotations in and out of the various sectors. So I heard about and also wanted to be able to segregate software from the broader technology. So again, you can see now I added this IGV software sector ETF to our sector sheets, again, both in our ETFs and our watch list Google sheet. So again, we can see if software is outperforming or underperforming technology, and we can see as of Thursday, software was actually significantly weaker than broad technology. Additionally, as I mentioned, we added an ETF for long the Spanish market. We saw the Spanish market outperform the past week. So another international market we wanted to be able to watch. So we added this ETF EWP on, which is long the Spanish market. I have not been able to find one that is short the Spanish market, but we'll look and we'll see if that ETF is shortable. So now we can either search for, you can scroll down to Spain, or we can search for EWP in the research sheet. So here's EWP for the Spanish market long. See, it's only got a risk reward profile 52-week of about 1.3, but longer term about 2.5. See, right now it's sitting at 39, so it's pretty high. Does have some potential upside up to 44. So if we look at it in FinBiz, again, we can see it's very high right now. Had a drop on those Liberation Day tariffs, and then a strong rebound right back up to its high. Is shortable. So if you're in an account where you can short ETFs, you could short this ETF. Has a very low expense ratio, 0.5. It is optionable. Got pretty good AUM, almost $1 billion, almost 500,000 average volume. So decent trading. So it pays a semi-annual dividend, pretty low percent, 3.4, but some dividend if you hold it long term. And we see it's pretty much near its all-time high. So again, some potential upside up to 44 or so. Again, very strong performer. So again, you think Spain's going to top out soon, you could short this ETF. These distributions, highest percentage in finance and utilities, industrials, pretty low in technology. So Banco Santander, very popular global bank, strong bank. So a lot of banks, telecoms, looks like mostly telecoms and banks are the top holdings. See pretty good fund inflows. Again, this is based on the MSCI Spain 2550 index, 80% in underlying. So again, if you're looking for says large and mid cap segments, so not small cap. So again, if you're looking for an ETF to trade Spain, long or short, check out this EWP. And we now have that in our research sheet for our ETFs, along with many other countries. So you see South Korea, South Africa, etc. We've been talking about these international markets for the past several weeks. So let me know what you think of trading the Spanish market. If anyone's traded EWP, what do you think of that? Is that a pretty good ETF for trading Spain? And if anyone knows of an ETF to short Spain, please let me know. I hope that all helps. So I know I'm running a little long, but very quickly, again, you find all kinds of international market ETFs, either in the main sheet or in our research sheet. Also, we talked about foreign exchange, Forex ETFs we have in our ETF database sheet. In many of the countries, so Brazil's doing pretty well. We talked about that. I got a rebound in China. Yin and yang we prefer. We talked about, coking coal and thermal coal. We're still long Met C. Emerging markets. Also saw a little bit of a bounce up in cannabis. Seems a little later in the season, but apparently it's swinging back up a little bit. So it might, seasonality might be okay. I guess Canopy, I think, must have reported decent earnings. Gold, again, we got plenty of ETFs to long or short gold. Again, strong uptrend in gold. There's that pill that had some flow. So again, some people think pharmaceuticals, but again, we expect further tariffs in pharmaceuticals. So my personal opinion, I'd stay away from those. India, again, trending back up. Mexico, again, rebounded pretty nice. Again, we saw that swing back up in oil. So if you want a long oil, GUSH or UCO, USO, short, DRIP, SCO. Semiconductors getting very beaten down. Got a little bit of a bump up in dry bulk shipping and oil tanker shipping. So again, I think that's front running the tariffs. We also have single stock ETFs in our ETF Google sheet. So Tesla long and short, NVIDIA, etc. We have others in our research sheet as well, treasuries, different durations, etc. Uranium, again, rebounded quite a bit. So we'll see if we get a correction retracement in uranium. Vietnam, again, bounce back off the Liberation Day tariffs. Again, volatility trading down. So SVIX, SVXY, XVIX. There's the yen. So long on the yen, short on the yen. So I hope that all helps. If you have any other ETFs you would like us to do research on, potentially add to our ETFs Google Sheet, please put those in the comments of our videos, any of our videos, or on our Discord. Please tag us in our Discord with any other questions. Or again, if you have any stocks you want us to take a look at or ETFs, can tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, etc. Also, we'd love to hear your feedback on what we can do to continue to improve our weekly trading game plans, our videos, our tools, Google Sheets, our community, etc. What can we do to continue to improve and add more value for all of our BeachBum traders? Again, if I missed your question or the stock you want to look at, please put those in the comments to our video or tag us in the Discord. We'll try to pick up on those tomorrow or in a later live stream or in a separate video. We hope that you like this content. Please smash the like button on our videos. Help us try to get the YouTube algorithm. Someday show us some love and share our content with more traders around the world. Also, we could really use your help and appreciate your help with sharing our content, reposting our content on your social media sites, inviting your fellow traders to join us in the live chat of our live streams, join us in our Discord, etc. Again, to continue to help building our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you again to everyone that joined us in the chat today, everyone watching after the fact. Hope to see you again back tomorrow for part 2 of our weekly trading game plan for the trading week, April 21st through April 25th. Again, we hope to see you tomorrow, 10 a.m. on Sundays for part 2. If we miss you tomorrow, then we hope you have a very happy Easter. And again, we hope to see you then. Thank you again and have a great day.